Welcome to A to Zephyr with Ryan Nauman from Zephyr. In this podcast, we help wealth managers, financial advisors, and asset managers overcome challenges in creating meaningful investor relationship experiences. We do this by introducing innovations driven by Zephyr's cutting-edge technology and global financial insights. Join us for this journey where we dive into pioneering wealth management strategies as Zephyr draws from decades of experience and guest financial wizards to address the nuances of investment management.
Hello and welcome to the A to Zephyr podcast. For those of you joining us for the first time, we should let you know that Zephyr is an investment management software used by financial advisors, wealth managers, asset managers, financial analysts, RIAs, and trust advisors. This podcast will address the many ways in which your peers in this industry use this software to set themselves apart from maybe even you. The wealth management space has become more competitive than ever, you know that, and with generational wealth transfer taking place, it's more important now than ever to separate yourself from your competitors by enhancing the client experience. Investors are demanding increased personalization, customization, and transparency from the investments and financial advisors and what they have to offer. Addressing these demands can be done by offering separately managed accounts, which, not surprisingly, enhances the client experience. And that's what we're going to talk about today. And joining us to talk about it is Randy Jones, Director of Product Management at Zephyr, Ryan Nauman, Market Strategist at Zephyr, and Nick Williams. He is the PSN Product Management Manager at Zephyr. Now, let's start with the first question, and I guess, Randy, I'm going to go with you for this question and ask you, how have separately managed accounts, or SMAs, grown in popularity amongst retail financial advisors, and what's been the catalyst for this?
Well, great to be back, Bill. I guess first and foremost is we'll start with the increase. So there have been a number of research studies from Cerulli, from different organizations over the last 3 to 5 years that have seen about a 40% increase in the use of separately managed accounts in the RIA, more in the wealth management space, which is pretty significant. As far as there are a few drivers for that, and what we expect, there was another research piece that we just posted, Escalent survey of 403 financial advisors. Mm-hmm. They found that on average, the SMA allocations are expected to increase from 18% to 26% between now and 2025. Wow. And then they had a piece on advisors who serve the high net worth industry, investors, expect to see their allocations increase from 23% to 31%. So it doesn't seem like the uptick and the use of SMAs is going to be going down. It's only going to be going up.
I can imagine that, especially among high net worth individuals, I suspect that they are not people who want to sit down and be handed the same carbon copy portfolio everybody else is getting. They probably have their own ideas about where they want to go.
And that leads us right into probably the number one catalyst is the personalization and customization aspect of having a separately managed account that is essentially your own private portfolio. It opens up the door for, like tax loss harvesting. If you have a portfolio, and let's say that one of your securities loses 3%, you can actually sell that and take advantage of the loss for tax purposes. So the main catalyst really has been this customization and personalization. We also, in the research, has found that advisors are now favoring separately managed accounts over model portfolios. So for the last 10 years, most of all bigger asset managers, the model portfolio concept has been sort of front and center for about 10 years now. So now the SMAs are even overtaking the models from the research, citing high fees and limited customization as two of the factors for that. And probably as far as a catalyst, I think the last one is that the barriers to entry have come down greatly. Our database, our PSN database that we'll talk about, turns 40 years old this year. And for many, many, many years, institutional investors were the only investors that had access to the SMA data. The minimums, could have been, hundreds of thousands to millions to even participate in the SMA program. Now the minimums could be 25,000. So that's been one of the drivers behind wanting to have that customization. But the limits on the minimums that are required have come down greatly. So that really opens the door for, high net worth and ultra high net worth investors.
Wow, that's fantastic. Well, you mentioned PSN, and we have a new voice with us on this podcast. It's Nick Williams. Nick, welcome. Good to see you.
Thanks. Happy to be here.
Now, I want to start, I guess, well, first of all, what is PSN? I know Randy referenced it and said it's 40 years old, but for people who may not be hanging around 40-year-olds, what is a PSN? What is the PSN?
So PSN is a separately managed account database. It originally stood for Plan Sponsor Network, but we've somewhat outgrown that as sort of our core focus. And now what we are is we're a database where thousands of managers who run SMA strategies use us to report about the strategies that they operate, the funds that they operate, and the different products that they have available.
Well, where should financial managers start if they're new to this when trying to locate the best performing separately managed accounts?
So it's a little bit different than finding a mutual fund or an ETF because SMA is essentially a private account by nature. So you can't just go out and see what's going on a Yahoo Finance or something like that. The performance just won't be there. It's also super common for the performance only to be available monthly or quarterly. And the reason for that is because a separately managed account manager is essentially customizing the portfolios a little bit for each client that they're working with. And what they do is they take all of the strategies that fall under a certain umbrella and they'll aggregate those accounts. And so within the PSN database, we take those account aggregates. So if a manager has a large cap strategy that they operate, they take all of the different underlying accounts that they're managing and they'll pull an aggregate of that. So some of those accounts are going to be a little bit less risky. Some of those accounts will be a little bit more risky. Some of them will have different tax loss harvesting, and they just take all of that and create an aggregation. And then they report that to the PSN database as a composite, and we'll have both the gross and the net performance. And we also have a whole bunch of qualitative fields that allow managers to describe their operations, the strategies that they're involved in, the styles that they're using. And it makes it really easy to get a good picture of what this strategy specifically does. And so we have over 600 fields. And then to make it a little bit easier for investors to kind of process that data, we've created over 200 different universes that we update. And that's useful for people who needs to invest in these products to create peer groups, style groups, and essentially rank managers and decide what meets the needs that they're looking for.
Well, before I move on, I want to ask about that peer group, style grouping that you talked about. What is that?
So they're essentially, again, there's over 1,000 companies that report and over 8,700 strategies. So as you can imagine, that's a fairly sizable ocean to get your arms around in terms of. That's a big ocean, yeah. And so in order to make it a little bit easier to process and determine how a manager's doing, we've created essentially 200 different buckets. And some of the buckets are big and some of the buckets are small. So for example, we have an equities universe, and that equities universe is several thousand products, and it includes all of the managers that manage equities products. And then we have, a large cap growth universe, and that universe would encompass far fewer managers and allow people to see what's going on with different managers within that strategy. And so we allow the managers to report which universes they want to be in. So that makes up some of them. Some of them are based off of returns-based style analysis, and some of them are based off of other quantitative metrics that we update.
Okay. Well, if I'm a financial advisor, an RIA, and I come to you and I've got some clients that I'm trying to create a product for, what would I do? What would that look like, Nick?
Well, generally speaking, what you would do is you would access the database through a tool like Zephyr. And so within Zephyr, you would have sort of a need that you were looking for. So you would have a strategy or a style that you were attempting to incorporate into your client's portfolio.
Yeah.
And from there, you'd use some of the tools within Zephyr to essentially search through the database and find the portfolios that are most interesting to you. And then you would incorporate those into your client's portfolio. You'd be able to run simulations and everything that you would normally be able to do with any other type of investment.
What fascinates me, Ryan, is it eliminates the need. It actually creates the opportunity to sort of have back trade evidence or data for you. So you really run it. You obviously can't run it forward, but you can build off of what should be it sounds like a massive database of all the back trading that's gone on. So you've got a really amazingly clear idea of what the performance has been like in creating one of these SMAs.
Yeah, Bill, you're exactly right. And, if we could somehow, and that's what we're trying to do, Randy's trying to do, is trying to figure out, are there trends that these managers offer that we can maybe move them forward? Because if that's the case, Bill, you and I, we're going to go have cocktails on the beach somewhere. We can figure out where the returns are going to be 5, 10, 15 years down the road.
Sweet.
But you're exactly right. And that's what's fantastic about having such a comprehensive SMA database that has integrity. And when we're looking at separately managed account data, it's different than mutual fund data. And Nick did such a fantastic job talking about it. You got to go to these databases or look for providers of data that have integrity so the data is correct. Right. And it's not errors. And so as a financial advisor, you really know what you're looking at. You have confidence in that data in order to make recommendations to your clients. And when you can combine PSN and Zephyr, the analytics and the analytical power of Zephyr and the reporting, it really is a great combination to go back in time and find out what is the skill of your portfolio manager. Is that skill really paying off in good returns? Is it limiting the downside so you can win without losing? How good is that portfolio manager? Because you're paying that portfolio manager money, especially with the active strategy. Are they giving you the rewards for that amount of expense? And it's a great tool in order for, to have together PSN and Zephyr.
Yeah, I want to talk a little bit about the role Zephyr plays. And Randy, I'm going to come to you on this one because I'm curious how financial advisors can leverage Zephyr to help them incorporate SMAs into their client investment portfolios. I mean, we kind of hinted at it, but can you take us a little deeper?
Well, just expanding on what both Nick and Ryan have talked about, first and foremost is having access to the data and the breadth and the depth of data. And it comes down to starting with due diligence and research. Many of the separately managed account managers don't, have a mutual fund or ETF. Many SMA managers may have a mutual fund product, may have an ETF product, may have an SMA product. And then there are pure SMA managers. So Zephyr allows you to really dig deeper into the qualitative characteristics, especially fees. The fee structures are completely different than you might find in any other investment vehicle, like a mutual fund, an ETF, a hedge fund. So Zephyr and the advisors having access to the data, will do the due diligence on the different strategies that Nick just talked about. There are many characteristics that are not available in our other data sets on mutual funds and ETFs, but it really comes into play when the managers only manage SMA products.
Yeah.
So the due diligence and the research is one. Certainly, as Nick mentioned, then we can start running hypothetical portfolios or even model portfolios that are now made up of SMAs versus, say, a mutual fund or ETF, with the sole purpose of having more customization and personalization in that portfolio construction process. And yes, as we've talked about on previous podcasts, we can still do the asset allocation modeling with running optimization for optimal SMA portfolios. We can run, Monte Carlo simulation. So it is a different vehicle. A lot of the analysis that advisors do in Zephyr applies across different vehicles. But then there are a number of unique components to SMAs that are also available to uncover and analyze in Zephyr as well.
It's fascinating. Nick, I saw you shaking your head there while Randy was talking. You have anything to add?
No, but it's important to understand that the SMA funds and all of the data that we provide in PSN really gets unlocked through a great tool like Zephyr. So being able to do those searches and optimizations and stuff like that, it doesn't go away. It just allows you a lot more customization in how you implement it.
One other thing, Bill, I guess that I'd like to bring is that with Zephyr owning the PSN data, we're limited to the characteristics and the data that we receive from a third-party vendor, for example, say Morningstar. We have total control over the data that we collect, the accuracy, as Nick mentioned, additional fields that we can collect that would be valuable to our clients. So that really gives us a leg up as well, in that third-party vendors that we redistribute, we don't have much control over the data that goes in. With PSN, we have quite a bit of control and communication with the managers to provide the best breadth and depth of data that we can. So you have one collection process, and then Zephyr to consume the data from an analysis perspective.
Yeah, no, I remarked on it being 40 years old. It's actually, I would think, Randy, the strength of the fact that it's 40 years old, because you have 40 years of data in it and 40 years to tune that data and how you quantify it and analyze it.
Absolutely. And again, for many, many years, it was really only available to institutional investors, but those barriers have come down now. And now we're seeing a huge uptick and use of SMAs in the wealth management space. So we're positioned well, having that history that we can present to our prospects and clients, and then, grow that business even more going forward.
Yeah, I'm going to throw one more question out on the table, and I'm going to start with Ryan on this one. Obviously, from the data that you mentioned at the start of this podcast, Randy, this question seems a little obvious, the answer to it anyway. But Ryan, do you think the demand for SMAs will continue to grow in the future? And I'm curious, as I'm listening to you guys, and I'm not a financial advisor or financial manager. I did, however, cover the financial news and business space for a long time as a journalist. And so I'm intrigued by the amount of personalization, and I mentioned this in the open, the transparency that seems to be there. So I would think that if I were an advisor, I would really be drawn to take a look at this, because it feels like, given the growth figures we heard at the start of this thing, I should be offering that to my clients. Your thoughts?
Yeah, Bill, that's a great point. And Randy, exactly. At the opening, he referenced those surveys that said the growth in SMAs is only going to grow into the future. And that's what we're seeing also play out in the PSN SMA database and our Zephyr application. So it's not just through surveys. It's, we see it in the data as well. And you mentioned it, Bill, offering tools, whether it's a service, and we mentioned this earlier on a podcast, offering whether it's a service or an investment product, it's not optional to offer transparency and customization and personalization. You have to offer that. That's table stakes now. And if you don't, you're going to get left behind. And it enhances the client experience when you can offer personalized service, a customized report, or an investment portfolio that is fully transparent. There are multiple reasons why demand is not showing signs of slowing, and you talked about it. It starts with industry trends, right? Industry trends are making it important for advisors to understand SMAs and offer them to their clients who are demanding personalized, customizable, and transparent investment products. It may not be a perfect investment vehicle for your clients, but being able to understand them and educate your clients on what a SMA is and is it appropriate for their investment portfolio, that's the key, and that's how you can enhance that client experience. Additionally, technology, Randy mentioned it. Technology and innovation is making it easier to invest in SMAs and making the investment vehicle more accessible to a wider range of investors. And that is not changing. In fact, the very popular direct indexing product is a type of SMA. It's all driven off the platform of SMA. So it's not slowing down. it's one of those things that you should learn about and have access to.
Yeah, and I want to drive home maybe one last point, because it's implied, I think, Nick, but we're not talking about just the world of equities here. We're talking about the breadth of financial instruments, right? That there's data available on?
Yeah, absolutely. There's data on essentially all strategies of separately managed accounts. And so because these accounts are essentially private, managers are able to take advantage of really any type of strategy that they see fit for that client. So yeah, there's a huge breadth of instruments that are available.
Yeah, no, I think that's a really good, important point to drive home, because I know, Ryan, you would know probably better than even me, there are a lot of people who feel like, boy, stocks are making me nervous at this point. So this is not just a stock. This is not but what I want to make as we close here, and you can add your 2 cents. It's not just an equity product that we're talking about here.
You're exactly correct. And I think that's one of the things that we should touch on. And I'm really glad you brought it up. Yes, we talk a lot about equities, but there's SMAs for bonds, whether it's a municipal bond fund or bond strategy or an international bond strategy. So you can do equities, any type of equities, really, bond portfolios. But also it's very important to note that you can access alternatives through SMAs. In fact, it's a pretty good opportunity, because let's say I want to invest in equities. I've got an equity strategy. But because I have the ability to customize it, because I own the underlying holdings and I can personalize it, I can tell that portfolio manager, I would like to put some REITs underneath this portfolio. So you can put real estate in there, maybe some private credit, which is really popular right now. You can also put some managed futures. So you can bring in alternatives that you can't with a mutual fund or an ETF. You'd have to hold them somewhere else. These are under all one wrapper, and it gives you so much more flexibility to customize this portfolio and how you want it.
Yeah, no, it's a fascinating product. And for any investment advisors or RIAs or anybody listening to this who want to have a further conversation with anybody at Zephyr, Ryan, who's the best person to reach out to and how they do it?
Yeah, fantastic question. So our website is zephyrfinancialsolutions.com. A great resource, fantastic resource, a lot of information about Zephyr, PSN, and what we do. You can also contact us at 1-800-789-5323. You can also email us at zephyrinfo@informa.com. And you can also email myself. It's Ryan.Nauman, Nauman, @informa.com. And we can help you and get you in the right direction.
Yeah, no, that's fantastic. Thanks, Ryan, Randy, Nick, appreciate it. Another interesting podcast, and I'm admittedly intrigued by this tool. And I would encourage financial advisors and all those who are wealth managers listening to this to give you guys a call and check it out, because I'm intrigued. And just want to close out by saying, if you're not a subscriber to the podcast, you can go ahead and click that subscribe button. That way you will not miss the next episode when it comes out. If you're curious about the product, the contact information is in the show notes. Don't worry if you were driving your car or sitting on a train and couldn't write down everything Ryan just handed out to you. Thank you for listening. And I'm reminding you that you can go out today and make it a great day or not. It is your choice. Thanks for listening.
Thank you for listening to A to Zephyr. Click the follow button to be notified when new episodes become available, and be sure to check today's show notes on how you can get in touch with us. Once again, thank you for listening. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Zephyr. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.